Okay, so good news, another good week for our fastball XRV. All right, I see some of you are still trickling in here. Looks like we're getting close to having everybody in. There's only one or two of you who are here who haven't been to boot camp, and you are actually scheduled to go to boot camp. So if anything about the XRV feels like a mystery to you, then don't worry about it, because it's going to be very clear after you go to the event. A little bit of housekeeping. I mean, boot camp is coming up. We are going to do it in May. We are getting the exact date nailed down with the Cadillac. So we're going to do it at the Hotel Cadillac in Miami Beach. Historic hotel, fantastic venue. Those of you who have been there before, you're going for free anyways. But I think that you should really consider going, because it's much nicer than it was. They've sent us pictures of the rooms. They did rooms that are sort of period and very nice luxury kind of rooms, and they redid the restaurant, they redid everything. So it's going to be a really great event this year again. So other than that, what I was saying about the boot camp is that, this service, I know some of you who have not been yet, you're making money on this and you don't know exactly why you're making money. And like I said, just study that Income Trading Academy and, just get yourself up to speed as much as you can. And then when we go to Miami, we're really going to drill this. But the important thing is that you focus on that content that you're looking at in ITA and just look at those, how to set the stops, how to set the targets. And generally speaking, it's all pretty much, what you're learning in ITA that's going to get you over the hill on this one. So let's talk in general about some of the questions that you sent. So again, I always appreciate you guys sending questions in ahead of time, since it's it actually makes it hard. You see what I'm seeing here on the this down here is all that I see during a webinar, is this little box. So if you have questions, I can pull them up. Okay. William, I know you're learning. I know you're on the ball here. So William, your question this week was a good one about the simulator data that you're getting and the fact that it's delayed. So I believe you're the only one who's working on delayed data right now. Everybody else has already been to boot camp and is trading this thing pretty much by the rules that we learned there. If you're trading it on a simulator and you have something weird happen, like you had last week, where you didn't know why the data was displayed the way that it was, or why it looked to you like something wasn't open or something opened at a different price than we had, just ask. Just get right in there and ask me, because that kind of confusion is that's something we want to avoid, right? So I want to make sure that you don't wind up closing the computer for the day. Luckily, we caught it that session. But I don't want you to close the computer and just say, well, I'm going to come back tomorrow and hopefully I'll understand it. The most important thing is that you understand it right then, and that there's no, there's no latency going into the next day of, I hope this one's going to be easier. These are very easy to understand. These setups are right out of the second module. All right, so this is your fastball module. And a couple things that we want to go over today, because there were definitely questions about them. First off, what is the effect of a 3-day weekend, and why did I send that note out to everybody? The fact of the matter is that any weekend is bad for trading. Okay, so if we have a Saturday and a Sunday between our trading sessions, it's been my experience, you know this from being on the Around the Horn plan for years, right, that Mondays are kind of bad. Mondays are the days that I like to avoid. Mondays are, if you look at last year's results, if you look at the results over the last 12 years, you're going to see that Mondays contribute very little. They do contribute. I mean, it's 6 points per year. It's essentially a 6% return for the year. But if you look at what the rest of the week does, it should give you a feel for the fact that Mondays are not contributing very much to the bottom line, and that Mondays are the days that tend to go back and forth, profit loss, profit loss, profit loss. And that's because we have news over the weekend, and the news tends to skew our results a bit on a Monday morning. A 3-day weekend, the reason I was browbeating you guys just to stay away from the market on Tuesday was, a 3-day weekend is that much worse. And when you get geopolitical stuff coming in, right? And like I said, I don't care if you love him. I don't care if you hate him. This president is generating a lot of geopolitical energy with his, sort of constant commentary on what's going on. When you get that over a long weekend, you're going to get some volatility on Monday that isn't going to be particularly helpful. In our case, it's mounted to things not triggering, but you just want to be conscious of that and stay away. So that's why I sent that. So somebody asked why'd you send the emails saying avoid Mondays? Why would you put something out in the first place, or why would you put something out in the first place on a 3-day weekend if you don't want to trade it? I put it out there because if we wind up with an inline open, then I'm going to look at these opportunities. If we wind up with a gap open, this goes for any day. So this week, Tuesday and Wednesday, we had big gaps, right? And what did I tell you? Every day I said the same thing. I know you want to find opportunities in these. Let's look for the inflections. Let's look for the reversals. And, let's see if they come in. It's okay that we didn't have trades those days. In my book, anyways, it's who cares? I mean, market cap's 100 points, market cap's 150 points. It's not our thing to go in there and say, okay, now let's force a trade. It's much, much better to, I had somebody say, well, I don't know what to do with my hands if I'm not trading. And I said, well, use them as a seat cushion, because on the days where you get these big gaps, it's really not to your advantage to trade. So the other questions that we had were about the trades that we did this week. Now, of course, we had another really good week. Some of you guys, although you've been to boot camp, some of you guys are brand new to this thing, this fastball XRV setup. So we are approaching saturation on this as far as the subscriptions go. So, it was put out there to you guys who went to boot camp first, and it is capped at 30 people. I want to do that because I don't want there to be an issue with you folks getting filled. So please don't share the ideas, at least not until after the fact, right? If we're all in and we're all looking for the move to happen, I don't care if you then post in the room that we're in FLXN or ICHR or whatever, but don't release that to the world until we've all had the opportunity to fill these shares. So on Thursday, the question that I had from actually two of you was about the fact that on some of these things the targets are narrow, and on some of these things the targets are really pretty wide, and how do you go about accounting for that? How do you go about setting your stops for that? I think we've covered this before, right? But your entry is always going to be, we know the entry, right? The entry is going to be below the low in the case of a short sale on this. And your stop, it really has nothing to do with whether or not you have a shallow profit target. These can be 1-to-1. These can be less than 1-to-1 on a reward to risk ratio, because as you've seen by now, I know I talked to Paul about this a couple weeks ago. I said, the thing about these is they have a very high propensity to move to the profit target. So if you set your stops too shallow because you're afraid that this distance isn't going to be greater than this distance, then what you're doing is you're not giving the stock enough room to wiggle. And I'll give you again, for the couple of you who went to boot camp and just joined this thing this past week, if you remember that first boot camp, Julie and I came in and we had those journals and we had them piled up on the table, and those were all of our trading journals. And I mean, it was like thousands of pages of what we had done over the years trading. And in the earlier journals, what you saw, if you looked at those, was that we used to trade this stuff in eighths and quarters, right? Which you hear me talking about all the time. I like a spread. I do not hate the spread the way some of you hate the spread. You guys, it gets above a penny and you guys are going crazy. And to me, that's more opportunity for profit. And especially if the spread is moving away from my entry price on the other side of the market maker montage, that tells me I'm about to make some money. But we used to get into these trades and we would just risk $1, right? That was our original philosophy, was you risk 1 point and then you try to get to your profit objective. This is much more similar to that than it is to what you're doing with the boot camp trades. Although at boot camp, if you look through it, I'm not telling you at any point that the reward to risk ratio has to be X, right? I just tell you that the reward to risk ratio is going to be what it is at the onset, and then at some point you can move your stop to break even. Right, you want it to be risk-free. So it's really not going against the grain when you think about it that way, but it's, I just want you to make sure that you're taking all these trades as they come up, because avoiding them because of the reward to risk is going to set you up to miss a bunch of good trades. But here in this case on FLXN, right, a 23.25 entry, got you down to $22.81. That was our profit objective. And why was the profit objective at $22.81? So for those of you going through the Income Trading Academy right now, right, you should recognize right away this green line here is the floor trader pivot. So my rule for these trades is we want to get $1 per share in profit or the pivot line, whichever comes first. So $23.25, right? You got about a 40-cent profit on this one per share on the way out. So, I know some of you are doing, you're doing exceptionally well with these, so FLXN, you walked away with $400. ICHR, here's another one. That was my entry. Now, where do you think I place the stop on this? Okay, so would I put my stop here at $30.60? Because a couple of you said $30.60 was where you thought you were going to put your stop loss. I would put my stop here at $30.44. So think back to boot camp. Let me just see these questions here that are... You were 30.37. Okay. Yeah, those are good. So TradeStation's having some hard to borrow issues. You might want to ask if you can I think they've got the lookup as automatic now, right? But Paul, give me a call tomorrow and we can just sort of talk through real quick a couple of things with the TradeStation stuff. It's not going to be widespread. It's just going to be on a couple of these things anyways. But So I did 3044, and I know that that looks tight for, for an Adrian stop here, being right under this thing. But what you have to consider is if it comes down to where some of you guys were talking about putting the stop, that's exactly the place you expected to bounce. Plus, first thing in the morning, you saw the bounce, right? So our order was, if last price is less than or equal to $30.88, then buy stop limit, right? Buy ICHR stop limit $30.93, and your limit price probably about $31. So here was your open, here was the bounce, here's where it went. So when you're initially looking at this stop, if you did have it, let's say you had it down here somewhere, right, from the prior session, you really give this thing room to swing. When you saw this bounce first thing in the morning, you saw this volume over here, then the right thing to do is to go and pull it up and make it a more conservative stop. And then in this case, again, right, boom, $1,000. So we had a really good morning. And, few of you are newer to this than others, and are doing really well with it. So, I'm not going to call it, well, I'll call Larry out. Larry is brand new to trading this stuff, and I think is using wider stops than some of you, because some of you feel like, you've got years of battle scars or something with the stops. He's using wider stops, and he's cleaning up, because he's making sure he's giving this stuff enough room to swing that the normal movement of the stock didn't do anything wrong here, right? Stock didn't do anything wrong if it came, down into here. If it hits this 3044 level, then you're expecting the next move is going to be down to here. But the reality is, even if it gets down into here, we don't care so much about how much of the range this thing's doing. So some of you are overthinking this a little bit in terms of, well, what's the typical range on the stock? And, you're saying, well, if it does 80 cents on or 60 cents on an average day, or 40 cents on an average day, then I'm not going to look for more than that on a move. These moves are not average. So these moves are based on, if you want to base it on something, base it on the prior session, base it on that fastball expansion range and volume day, and say, how much do I think the stock's going to move today? Based on, I think it's going to do at least 60 or 70% of the prior session's range. So in this case, $1 a share if you got out at the pivot. And then, right, I feel like some of you are not pulling out the tools enough. So you learned about all this stuff at boot camp. How about we go ahead and use it? Because look there. Right? That is an intraday switch hitter pullback, and look what it does. So you banked another $2 per share if you were on top of it. It's okay if you went out and played golf, right? Or if you went swimming, or if you went to the beach, or you went for a hike or whatever. It's okay you got out here and then you were done with it. But if you're sitting in front of your machine anyways, then I think it's really important that you take some of these tools that we focused on for an entire day of your life, right, when we were together, and you start looking at this stuff and saying, okay, well, I see, look, 31.37, I see profit potential at least to 31.87. That's another 50 cents a share. And great, you made $1, you feel good. This is this whole thing about it feels so good to take a profit. And then it comes down in here, and you see this thing start happening, and you say, well, I don't know, it's getting kind of late. And, we weren't even at the first hour mark yet. And I mentioned this in the room. I said, look, we've got another opportunity on this one. And I was trading from our beach house, right? We were down on Balboa doing this thing. And I'm trading sitting on a sofa in our den down there, right? And I still managed to stay focused on what's going on here. And, I think all of you are more than capable of getting in front of these kind of opportunities. You guys have had lots and lots of training. You're profitable traders. The fact that you're profitable traders puts you so many just leaps and bounds above 90% of the people who are out there. 90% of the guys who are looking at this stuff are drifting around in internet chat rooms, and they're trying to figure out how to do penny stocks, and they're following this guy, they're following that guy. You guys have got a set of tools that actually has you making money, and that is a rarity in the trading industry. And every one of you is profitable, and every one of you has absolutely the capability to go in there and follow this stuff every single day and use the training that you paid $10,000. Sometimes I think we ought to charge triple for those boot camps, what we do, so that people would appreciate it more, because they're paying these other guys, $50,000-$60,000 to learn how to do nothing. And for some reason, they'll fall back on that stuff like it's, well, I paid a lot of money for it, so it must be worth 10 times. You guys are profitable traders. Focus on the stuff that we talked about. Get in front of those opportunities and make yourself some money. So UVE, right? This one was a topic of conversation. It opened, and then it fell down into the qualifying range. I didn't take it. I was trading those other things. I didn't like some of what went on in this first bar. So I was really kind of waiting for the second bar of trading to come along. If you took this, though, you didn't do anything wrong. Right? It got you in, and essentially, this thing got you back out again for a 30-cent loss. And if you took it on that, a bunch of you were like, well, you didn't take this. Why didn't you take this? What's the, what did I do wrong? You didn't do anything wrong. You saw the opportunity. The opportunity was in front of you, and it didn't go in your favor. And that, that's going to happen sometimes. You can't make money on every single trade. Julie got up in front of a crowd of 2,500 people in London, and as they were hammering me about, well, how do you avoid losing money? How do you avoid losing money? And I was kind of looking for the answer, and Julie finally just said, let me take the mystery out of this for you. You're going to lose money. It's trading. You're going to lose money. You're going to make money. The key is you make more than you lose. If you took this trade, you didn't do anything wrong. Right? I just felt like I saw a dynamic here in the morning that I didn't love, and that's why I told you guys, I'm going to pass on it for right now. Let's get into the next day. Right, Thursday and Friday were the only days that we had triggers on these. Again, if you get up in the morning and you see those like 100 and something point gaps, then just figure you're going to be sitting on your hands, right? So Tuesday and Wednesday were a no-go for this, but Thursday and Friday you made a living. GNL, we talked about this in the room, right? This wound up being a scratch stop. Why was it a scratch stop? So, William, if you're looking at these and you're trying to figure out, well, what's the money management going on here and why are they doing things? It seems a little bit random to me. It's not random at all. This is just a different price threshold than I'm using on the trading plan. So on the trading plan, I'm using, 10 cents below the low of the prior session for a short sale entry. And in the case of the XRV setups, what I'm doing is I'm just saying, okay, where was the prior low for a short? Where is my first target? Okay, here we go, 1864. And then I'm just splitting that distance in half. So it's still, if it gets 50% of the distance to the target, I'm looking for a break-even stop. The difference is I'm pulling in my stop, and instead of saying, I'm going to get out exactly at the price that I got in. I saw a couple of you do this week, and I know you were frustrated because the things turned around and went in our favor. Why not just give this a little bit of room to breathe, right? And say, here was the high swing price after the opening tick, right? And then, in general, give yourself a nickel, give yourself a dime for price to move against you. That's not a lot of money. That's not going to change your lifestyle. Also some of you are worried about 5-cent slips on these, 6-cent slips. You're setting your entry criteria a lot tighter than you are on those around the horn trades. I want you to stop talking about slips unless they're 20 cents. it's really not a consideration. So, and I just say that because I'm not looking at it, so I figure if I'm not looking at it, you probably shouldn't be looking at it. MTSI. All right, we had an entry. This was the one that some of you wound up stopping out exactly at break even. And then this happened. Not some of you, 3 of you. A bunch of the rest of you, managed to catch the move. But it comes at least 50% of the distance. And then it reverses back up to exactly where we got in. Well, how about giving it room up into here? Okay, or maybe through the prior session's close. $34.51. So instead of losing 10 cents, if it goes against you, or instead of getting out exactly flat, if it goes against you, you get out with a 9-cent stop. Because the comment somebody made to me was, well, those things add up. And I'm going to say to you guys again, those things only add up if you add them up. Because the point of this is to catch the moves. And if you keep saying to you, well, I got out exactly at 0, I got a very, very tight stop on this, and you missed this, you didn't, you really didn't prove anything to me. You didn't prove anything to yourself by getting out exactly where you got into it because it made this swing. I'm giving a little bit of room to breathe, and I think if you're not, you just sort of have to get over that psychology of that thing and give this stuff the opportunity to move in your favor. This did absolutely nothing wrong when it came back to $34.32. And in the end, right, what happened? NTRI, this was kind of a no-brainer. I mean, everybody got this one, in the room when we were talking about it. This had a very easy entry. This is the one that William was looking at and couldn't make heads or tails out of because on the delayed data that he was getting on the simulator that he's using, it didn't print all this stuff up here. So when we were talking in the first hour trading pit the other day, if you're wondering what he was referring to, his sim didn't have that data, so it didn't qualify. So remember, your criteria here is if last price is greater than or equal to $49.02, then sell short, stop limit, 48.97 stop, 48.90 maybe limit, 48.87 limit, and look what happened. We wound up pulling just about $1 a share out of Nutrisystem. YRD. This one was a little bit later on the trigger, but still within the first hour, right? We're focusing on the first hour with most of these. And, again, look what happened. So let's say that you had your trailing stop right there, your 50% to target level right there. If you got out exactly where you got in, you missed $500. You missed you missed however many shares you're trading. I mean, you missed the move from 38.04 or from 38.58 down to 37.54. So this was $1, right? So this is you're trading 1,000 shares, that's $1,000. And if you got out because you insisted on having an absolute break-even stop here instead of saying, well, you know what? It kind of has to get up to there in order for this to be a stop out. Even on what I'm going to call a break-even stop. It has to get back up into that range and maybe tick up into these lows yet for that to be a stop out. Then you missed a big move. And you don't have to miss them. I mean, I know you don't have to miss them because we got them and a bunch of you guys got them. So just start thinking about loosening things up and approaching this stuff from a trader mentality instead of, want to say anything that's going to irk anybody, but you can't be so afraid that you might have a loss that you never get yourself in front of the possibility of a gain. And then finally we had ZAYO. So ZAYO, right, this one triggered pretty much right off the open. A bunch of you got it, and, then weren't so thrilled that, it was a tight profit objective. But look, the profit objective is the profit objective. And, you walked away from this with a couple $100. Just be happy that you got out at the profit objective instead of grousing at me about the fact that there was only 30 cents on that trade, right? $300, $150, whatever number of shares you're trading. That's all there was on it. How about being happy that you weren't there when we hit our profit target and the thing reversed and wound up going all the way up to the next pivot? This was fine by my book because it was one of 1, 2, 3, 4, 5 opportunities for the day, right? Every single day we got a bunch of opportunities in these, and they tend to pan out. That is the extent of all the questions that you guys sent. So this was a much lighter week, which, I think is probably a good thing. Ian, yeah, you had sent a thing about, so those of you who are looking for a home in terms of broker-dealers, I'm going to say one of the biggies is making sure that there's a good short list. So, we've had fairly good luck with Vision, right? The only thing is you have to treat the shorts a little bit differently. You don't tick the short sale box. You don't say sell short. You just say sell. I don't know what that hang up is there, or why the short list is more accessible that way than it is when it goes and checks for the availability. But other than that, there hasn't been a problem. So Johnny says he's getting filled every time as long as he doesn't designate it as a short. I don't know if that's still the case, but yeah, okay. So that's still what he's doing there. So if that's the case, just do it, right? I mean, if you're not getting a violated the short sale message after you place the trade, you didn't violate the short sale rule, because that compliance officer would be sending you something saying, you didn't get short here, and it would come within a couple minutes, not a couple days later. So that's just the hang up in the way that order route is executing. So I think you guys are on the lamppost. Lamppost is just, they don't see that designated short sale offer when it goes through. So that's Vision. And Ian, if you want to do, I mean, it's going to be a matter of what's easier for you to set up. I think, you're in England. IB is it's kind of an easy place to set up. But any of these guys stateside who are, Lightspeed is fantastic as far as the execution quality, as far as the short sale list. I don't have any kind of a rebate or anything, but I think you were already rebated. Well, I mean, you went to boot camp 5, 6, 7 years ago, right? So it's not going to apply to you anyway. So, but I can talk you through the brokers here who are, going to get you a better probability of a fill on these. And then as far as TradeStation goes, it's, if it was hard to borrow, did you try checking the locate to see if they could locate shares for you? Or maybe call ahead of time, just call with the list ahead of time and say, look, I'm going to be looking to short, this stock, and this stock. And then, could you make them available for me to short? Because they're not going to, it's not like it's not like placing an order before the market where they charge you for the order, even though you haven't filled it. It's just they make it available for you to short. You're not the first one. I mean, TradeStation is, well, you know my feelings on it. I mean, people have had really good experiences with TradeStation because they like the platform, but then after TradeStation was sold last year, they definitely had some issues with some of the order handling and short availability, I guess. So, but you can check ahead of time. If you check ahead of time, I'll bet you resolve 80% of your problems. And if you don't, then call me. You get my number. I'll figure it out. Speaking of calling me, I am going to be in New York for the Traders Expo. And if any of you guys are going to be there, I'm doing one day. So Sunday I'm doing like a long thing for their Diamond members, or it's a paid thing. But the other days that I'm there, I will definitely be around. So we'll be around starting Saturday, and I'm going to have dinner with Paul and Paul Laprade and his wife Josephine. If you guys are around and you want to join us, the more the merrier. But that's on Saturday, and then we are there through Monday. So I'd love to see any of you who are in the New York area. And then in May, I'm going to be speaking at the Money Show in Las Vegas. So if anybody's going to be there and you're not coming to boot camp, which again, if you've been to boot camp, you've already paid. So I don't, go to the Miami boot camp. It's always... you guys come to those things and you've already been, and I walk away with great ideas, right? Because we're exchanging a bunch of ideas, and it really winds up being a great event for everybody. And Ian, you didn't go to the follow-up boot camps. They're very different than the event that you went to. So essentially, that first boot camp is now what I call the Income Trading Academy, and it's all online, and I just make everybody who's going to the boot camp watch that thing, because when we're at the boot camp, what I want is a bunch of guys who are on a level playing field. I'm sure you remember our buddy Dave Gaudette from the first boot camp. He was brand new to trading and had so much trouble understanding everything. He's been to 2 boot camps since then, and he is gold, right? And what I learned from that first one was, you have to, everybody who comes even to a first boot camp, it's got to be like their second one. They've got to have the material under their belt and really know what they're talking about, and then it becomes a self-fulfilling prophecy, right? Everybody comes there looking to figure out ways to make more money trading, and they leave knowing how to make more money trading. I'll get you the firm date. I mean, it's looking to be that first. That last weekend in April, first week in May. We just need to get confirmation from the hotel that they're ready to go, that they're going to be open. And, it's definitely not going to be the weekend of the Money Show, because I'm going to be in Las Vegas doing their event. But, yeah, I'd love to see all you guys there. It's really it adds so much color to have the alumni there, and it adds so much to the yeah, Paul. I mean, if you see, I don't know if you guys can all see the chat or not, but Paul's asking about discretionary trade, on these pullbacks on this thing. What I would say about all of these, I think I said this in the room the other day. I don't think you were there, Paul, but if you see firm levels of support and resistance, the trick, of course, I think you took it, so you know the trick. The trick Paul is talking about is you want to catch these at the bounce, right, and then set your stop on the other side of the pivot. Some of you are using that pivot line as your stop on a trade like this, and the most likely thing that's going to happen, if it does, this one didn't, right? It just bounced and went. So Paul just played this as a switch hitter 382 bounce from the prior session from that leg, came down, bounced, and then, really what this was a measured move. So if you, again, if you put your boot camp hat on, what you should see is this is the move that you're measuring for this bounce. Where do you think the next bounce is going to go? Look at that. It's exact, huh? It's like I'm an oracle. Or it's like the market just moves the way that we expect the market to move. So either Adrian just has some sort of psychic genius, or the stuff that we've all been looking at for the last 20 years actually does what we think it's going to do. Second bounce is going to be shallower. That's just the nature of the game, right? Second bounce, where does it go? Right into that closing range. That makes total sense to me too. So all of you have got those tools. You might not have looked at them for a while, but where do you expect price is going to go based on what's happening right here, right? Second bounce. Where does it go? $45.94. First bounce, measured move at the 382 pullback. So I didn't do videos for these this week because we were down, we were down on the island, and we were actually trying to have sort of a week off. Actually, we're going to be there next week yet, but hopefully the webinar will go through and answer the questions that you guys have, about these additional opportunities and stuff. Listen, I'm just thrilled everybody's making a solid return on these setups, because they've been working for me for a year. And, when somebody said, you need to put this thing out there as a trading service, I said, most of these guys, most of the people who are going to get this in front of them aren't going to understand what to do. And then he says, well, what about just offering it to the boot camp guys? And, bingo, you guys are all cleaning up with this. And that's what I want to hear. So I'm so stoked that, everybody's doing well with this, and I just want you to keep doing well with it. And if you have questions, call me. If, I saw Johnny a couple times this week. David, I'm down in Newport for another week. If you want to come over, if you want to go through some stuff, just let me know. And, we're going to be there definitely Tuesday through next Friday for sure. So any time in there that you want to get together and bounce some ideas around, I'm happy to do it with you. But and then we'll be back up in LA for at least a month. But all right, so this was a little shorter than the previous webinars. Again, I'm super amped up. You guys are doing great with this. Keep the emails coming, because I love hearing, or the text. I love hearing that you're doing good. That's it's more rewarding than you would ever believe, but I'm just so happy that it's something that has taken off for you guys just as soon as you started doing it. Yeah, I'd be happy to explain. So, David's asking about the spread moving away comment that I made earlier. So I'm trying to think of the context of that. I think that had to do with a trade that one of our friends here was very, I'm not going to say nervous, but he was very conscious of the fact that the spread in one of the stocks that we were in kept widening. And I kept saying in the first hour trading pad, I kept saying, you know what, that spread is what you want. You want to see so we were in, let's say we were in, I can't remember what the stock was, we were in, let's say at 65 and an eighth, or we were in $65.12 we were in, and then we were long. And initially the spread to the upside was at 20 cents, and then it was at 30 cents. And then it was at 40. Okay, so he wants to admit that it was him. It was AGIO, and it was, in fact, Goran who was, looking at that saying, holy moly, this spread. But the higher side of the spread was moving away from us much faster than the bid side was falling out from under us, right? So the bid side was only moving down maybe a nickel at a time, and that ask side was moving away 10 cents at a time, and it was just going higher and higher and higher. And then, Goran had said he was going to put his stop at, I believe it was like the blue pivot line, and I said, if it ticks the other side of the spread, you're going to get taken out of that trade. And it's almost a guarantee it's going to take even if the spread is 40 or 50 cents. What some of you are doing is you're looking at your P&L. I know you are, even though I tell you don't look at your P&L. I don't want those P&Ls on the screen. Look at the chart. Look at what the stock's doing. Because if you've got a 40-cent spread, it's just the nature of a market that it's going to tick both sides of that spread. And if you've got a 40-cent spread and you've got a 20-cent stop or a 15-cent stop, it's only going to happen. It's natural. You're going to get stopped out of that trade. And my whole goal was to stay with that trade. So as the spread was widening, what I saw was the bid was staying firm and the ask was moving away. And what that told me was there weren't enough sellers there to accommodate what was coming. And the first time that you got a little bit of that pressure back in, remember this whole thing is based on data that I'm buying that's telling me where the pressure in the market, the prior session was coming from. So if I know that we've got a large buyer in, let's say Goldman Sachs, and I say something to you guys like, oh, it looks like the first time Goldman is willing to sell is up $1 from here, and that's where I'm going to target. It's because I see the guy who's in play on the stock, and it just so happens in that case that there he was showing a giant block of shares up $1 out of the market. And what the spread told me was it's going to go where we want it to go. So you have to just look at these things different. Yesterday somebody in the room said, well, I'm not taking that one because it's got a nickel spread. And to me, holy cow, nickel spread, that's nothing. But when you're used to trading the scalps, or you're used to trading the around the horn trading plan, the way that we've been doing it for years, those are NYSE securities, and those are, in my opinion, a much more orderly market than the NASDAQ is. But in the NAS, you got to do a little bit more tape reading and a little less consternating about, whether or not you're going to slip a nickel or whether or not you're going to slip to a stop counting slips and just look at the end result. You're making money, right? It's not, don't worry about how much more you could have, should have, would have made if everything would have gone the way you wanted it to. Take a look at how do I play this market. They're different animals. The NYSE and the NASDAQ are totally different animals. And you've got to just adapt to the fact that a lot of these are NASDAQ trades, and they're not going to behave the way that you want them to. They're just going to behave the way that they behave. But, for us, so, Goran is, he's on Realtic, and Realtic's going to get you a lot tighter fill on these things than some of the browser-based brokers or TradeStation or anybody who's shopping it internally on their book is going to get you a bigger slip than when you're going and routing stuff yourself. So I know that Goran is having very tight entries. Goran's taking the time to go through and route things specifically to the market that is most liquid in a stock, and that's something we'll talk about at the boot camp too, how to do that, since the cat is out of the bag on that whole thing, and how to tighten it up. But for most of you, if you're slipping 4 or 5, even 10 cents, well, not 10 cents, but if you're slipping 4, 5, 6 cents, then I wouldn't get angry about it. I would look at it and say, how am I doing overall? All right, anybody else? Do I enter any differently if the close is not the high or the low for the day? You think about this. So if the close isn't the absolute high of the day or low of the day, I'm still looking for that high to be my entry. What I am also looking for, though, is the possibility that it's going to drift a little bit like, Keys wasn't a situation where that happened, but, I'd be looking for this kind of a thing. So let's say Keys closed the prior session here, where my mouse is, and then, the next day it comes in and it starts drifting lower. Like, that's one I'm going to look at more for the possibility that it's going to bounce down in the range if it already closed low. Because, part of what I'm doing is I always consider this to be very artificial, right? This is where we closed. Let's say it started moving lower just before the close. If the market had another hour to trade, what would the stock do? Probably come down to here and then bounce, right? Let's move it the first time. So, if it closes off the highs or it closes off the lows and you're looking for anything, then I would say look for a pullback, which I think is probably what you're doing based on your question. If it closes at the high, right, I'm assuming that if something closes up in here, then if it had another hour to trade, probably what it would do is move up, right? Keep plowing higher. That's the philosophy behind the fastball anyway. And, just stay focused on that. Stay focused on if it's down in the range a little bit on the closing bell, look for a bounce at the most likely levels, right, that it had the prior session. In case of Keys, right, we see a couple of places here that we would see a bounce. Just think back to boot camp. Just go back to your training and start looking for volume by price, start looking for support and resistance levels, look for those switch hitter pullback levels, and use those to time some of those alternate entries, and certainly look for the floor trader pivots and the confluence there, and you'll be good to go. Everybody is done and going to go have some fun and focus on you had another good week, and again, I am super amped up that everybody is doing well with this, and I want you to continue doing well. And if you're having any issues at all in how to set these things up and how to roll with them, call me. Do not, if you are confused, do not stay confused. You guys all have my phone number, and we're all friends, so give me a buzz. All right, you guys have a wonderful, wonderful, wonderful Saturday and Sunday. The rest of your weekend is yours. Go spend it with your family. And yeah, there'll be a link to the recording will be available in about, I would say in about an hour. It'll post it.